Welcome back, everyone, to another episode of Living Your Greatness. This is your host, Ben Mumme. And the goal of my show is to help you master the best of what other people have already figured out. So if you are new to my podcast, please hit the subscribe button. Today, I am joined by Lobo Tiggre, a highly experienced investor and speculator from the Independent Speculator. It is great to have you back on the show, Lobo.
Well, thank you, Ben. And I guess if we're going to talk about lessons from the past, we should make sure that people understand that I am also known as Louis James from my Casey research days. I just had a phone call with a client now, and I said, "This is Lobo." He says, "Who?" "Louis James." "Oh, okay." So if people want to know my credentials, we should probably throw that other name out there because that's the one I wrote under for all those years at Casey Research.
Actually happy that you mentioned that because I'm even curious to ask you, even before we end up hopping in today, what is like the background of Lobo Tiggre? Like it seems like a secret name here.
Well, it's a long story, but in my Casey days, it just seemed, I mean, it's kind of a flower power 60s kind of name, and it's cool, except sometimes in Latin American countries, people don't believe it's real, and I pull out my passport and my driver's license. Oh, wow, they can't believe it's a real name. It means tiger wolf in Spanish, very colorful. In my anarchist, rabble-rousing libertarian days, I was Don Lobo Tigre, very much modeled on Don Quixote, charging at government windmills. But anyway, for Casey Research, we decided a more normal sounding name would work. You know, everybody loves a guy with two first names. There's family history there. So we went with Louis James, but it is me. And Doug kept outing me. Like, I know it seems kind of flaky to some people, but Doug would be up there on stage in front of thousands of people at some big conference. Well, saying, well, but the Lobo says this. And so after a while, it just seemed like there was no point in the pen name. Transparency is a hallmark of everything I do now. So I just came out of the closet, as it were, with my real legal name, and it weirds some people out, but it is what it is.
You know, something that I kind of want to start this conversation with is something that has helped me, become more diligent as investor and speculator is a lot of your work because it's very educational. And, there's a quote that I want to start off this conversation and kind of find out how you have actually applied it to your life. But it's from your good friend, Rick Rule. And it's, if you're willing to work, just save. If you're willing to work a little, invest. And if you're willing to work a lot, then speculate. So how have you applied this idea into your career? But more importantly, how have you also shared this with other investors and speculators?
Yeah, I gotta say, Ben, it's kind of bad news if you want to start on a downer note here. It's not all bad news, but a lot of people think of speculation or they think of mining stocks sort of like, Bitcoin 1.0, they think of it as the old get rich quick scheme. But, there's a reason why the phrase get rich quick scheme is that's not a positive. Nobody goes into a boardroom to raise funding for a get rich quick scheme. That's a bad thing. It means it's a fraud, or at the very least, very prone to failure. And a lot of people have viewed speculation as a way to get rich quick. And in fact, even, the masters of the masters, Ben Graham, Graham and Dodd in their seminal work on securities analysis, they have very negative things to say about speculators because in their mind, these were the charlatans. They never met somebody like Doug Casey or Rick Rule who made a consistent practice of success. Like consistent, it's key. Just like in a mine, you want consistent mineralization. In investment in speculation even, you're not just trying to throw darts at the board. You're trying to follow a method that will yield results over time. Because if you're just going to throw darts at the board, you're really just gambling. Might as well go to Vegas. Well, I don't know, maybe the odds are worse there. I'm not sure. The casino of junior mining stocks, picking any one, your odds are something like 5,000 to 1 against. The odds may be worse in Vegas. I'm not sure of that. But anyway, to Rick's point, if you want to make serious money in this space, you should be willing and able to put serious work into it. And yes, you will get paid in proportion to work. I remember a workshop I gave early, I think it was at a Vancouver show almost a couple decades ago. And I was talking about reading through the company's or companies' corporate disclosures or quarterly disclosures. And this person's like, are you kidding? Those things are 80 pages long or 100 pages long. I got to read all that. And I'm thinking, you want to make $1 million, but you're not willing to read 80 pages? And so, yeah, there's another way of putting this, switching from Rick to Doug, is Doug likes the Pareto law, right? 80-20 rule. And if you're willing to just put 20% more work in than 80% of the people out there, you'll have better results. And if you do another split, like another 20% again, then you're 96% better than the average Joe out there. And it's kind of sad, but the good news here, Ben, is that so few people try. I mean, really try. That if you do, then you can be better than 80% or 96% of your competition just by trying, just by putting the work in, by getting serious about it. Then you can obtain more serious results.
Yeah, I definitely agree with that, Lobo, in terms of being deliberately better, and learning from your successes and kind of failures, both as an investor or even speculator. And it actually makes me think, something that you spoke about last time that you had come on my show was, this was back in 2021, first time that we ever met. And you were talking about uranium. As we saw both in 2021 and as well as this past year, we've seen it do very well, in terms of your conviction and all your research that you put into, those decisions. And so the question that I have for you, it's a little less about, uranium or a specific investment. One of the reasons the best investors, whether it's Benjamin Graham, make, consistently good decisions is that they rarely find themselves forced into decisions by circumstances. How do you position yourself to take advantage of the right opportunities as both an investor and speculator?
Well, the answer might surprise you a little bit in that, because nobody can time the markets, not consistently. Nobody knows when. And, the simplest answer is you never go all in. Because, or if you do, like if some once in a lifetime opportunity comes along and you go all in, you then are unable to take advantage of what happens next. And especially if you're wrong. Right. So a very simple idea is never go all in. But the real thing really is it's more emotional toughness, emotional intelligence, and discipline. One of I always sign off with caveat emptor because things are so risky in this space. But my other big motto is discipline pays. And the good news is that discipline is like a muscle that can be learned and exercised and strengthened. Maybe the better news along the lines of what we were just saying is that 80-20 rule, so few people try that you can be truly excellent just by making the effort. But the bad news is that people don't like it. People want to be lazy, or I'm not sure how I can explain it. But the serially successful people that we see in this space, they're the kind of guys or gals that the market melts down, gold tanks, whatever the commodity is, nobody wants to hear about it. And they have the courage and the liquidity. So I'm adding the emotional intelligence and the don't go all in thing. They have the courage and the liquidity to act when there's literally or figuratively blood in the streets. So how do you position yourself? You can't know when that's going to happen. You have to always be ready for it. And then when it does happen, you have to be able to act. And I know personally, a very painful lesson on this for me was 2008, when things started falling off cliffs. Nobody I knew jumped out a window, but it was that kind of time in October, November of 2008. And I could see, like, I got it. I understood that value and price were diverging in a big way, and there were screaming buy opportunities on the table. But I had bought a second house. I had put all kinds of money into this, that, and the other, and I was completely illiquid. And I remember in the December 2008 edition of Doug's International Speculator, I put a list of best buys, and I think they had all doubled within months because the gold market came screaming back. Everything else took longer, but gold came screaming back. The better gold stocks moved right away. And I don't have the data from my Casey days anymore, but if memory serves, by the top in 2011, I think the average of that list was something like 400% gains. And, I wrote about it, I picked the stocks, but I didn't participate. So yeah, that was a lesson that I have learned ever since. So two-part answer: discipline, mental intelligence, emotional intelligence, sorry, and liquidity. Don't never go all in. I mean, it has to literally be a once in a lifetime opportunity for me to just put all my chips on the table.
Absolutely. I think that's very simple but good advice. I like the fact that you talk about discipline because that is kind of interconnected to patience. And in my last interview with Rick Rule, we actually spoke about, Charlie Munger always says, it's all in like the waiting game, and in terms of being patient. And once you have that conviction with your thesis or that high probability, um, usually the weakest investors don't know how to stay in emotionally to actually see like the rewards play out, right? And so that's kind of like the second piece that you kind of spoke upon. So I really appreciate that.
Let me add something there, though, because it's not just beating up on people who, aren't strong enough or man enough or woman enough or whatever to tough it out and, average down if it gets on sale, because I mean, the companies can fail, right? Not all of these speculations are going to work out. And particularly in the junior space, if you're not a producer, you're an explorer and the markets turn south, you have to ask yourself, can this company even survive? If you go into a real market downturn and the company has 2 or 3 years of cash in the bank at their current burn rate, or maybe they're a prospect generator and other people's money is being spent on a high risk exploration, you can have greater equanimity as you as you average down or do what you have to do with that emotional intelligence. But you also have to look at, like, holy cow, this thing can fail. They have 6 months of cash left, and gold just broke down, or uranium, there was another nuclear accident, and like, that company is not going to survive that downturn. Or if it does, the dilution for shareholders, as they finance it penny levels, and then they consolidate the shares 10 for 1, and then they finance at penny levels again, right? I'm not just making that actually happens in a real bear market, or in a negative outcome specific to that company. And even if the company eventually, has a sort of payday, the shareholders along the way get thrown under the bus. An example of that would be the old Phoenix project that Rubicon had. And I'll mention this. I normally don't talk specific stocks, but this company no longer exists, right? But, Rubicon was this huge wipeout. Shares, went from dollars to pennies, rollbacks, refinances, trying, more failure. And then they sell to another company and there's more failure. And then they finally sold the mine to somebody else. Now I forgot who bought that mine now, but none of the previous companies developing just that asset are still there. But almost anybody who didn't buy right before they sold, and enjoyed that premium at the end, almost everybody else had losses locked in. So not to beat that to death, but just, bear in mind that there are negative outcomes in this space too, and you have to be willing to call a spade. This is another mental toughness issue of accepting it when you've made a mistake and taking your lumps and moving on.
Absolutely. Yeah, no, I'm glad that you pointed out that in terms of, I think that goes with also being highly selective and hoping to do enough research to pick the best companies, right? Like the best of the best, right? And especially in a sector like this, I think 90% of the companies about roughly aren't even companies on the market, right? Aren't even good companies, right? So that's super important for sure. And I'm glad that you brought that example up. Lois, something that I want to transition to is, I know right now, you've spoken a lot recently about, gold as well as gold stocks are your highest conviction right now for 2024. So what makes, your conviction so strong?
Well, a couple things. One is just I'm not a technician. I don't draw lines on charts very much. I look at the charts to make buy and sell decisions. Prices, the charts help with that a lot. Um, but still, you look at the long-term chart for gold, and we're going into a situation where we're still dealing with the inflation pig moving through the python and a recessionary outlook. Even I'm still in team hard landing. I think that what the Fed has done, that record tightening is probably going to break some more things. We're going to see more pain. And I think the economy is more fragile than most in the mainstream seem to believe. But let's say I'm wrong and team soft landing is right. A soft landing is still a recession, Ben. It's a land, right? You're bringing the plane down. It's just not so bad. It's one you can walk away from. So the mainstream view is still that we're going to have a recession, and gold does well in recessions. But instead of going into this after a big low or a big retreat, we're going into an environment that, if I'm right or the mainstream is right, it's bullish for gold. And we're going into it at a plus or minus $2,000 price level. I mean, that, the last time we went into this, 2019, 2020, before the COVID moonshot, we're working our way up from 13, 14, 1500. So we can get into some pretty ridiculous numbers. We can start throwing out, headline clickbait stuff for you here, and I won't do that. But just consider that from where we're at right now, a mere 10% rise is over $2,200 gold, which is another new nominal all-time high, like well above past nominal all-time highs, enough to make even more headlines than we've seen. And gold typically doesn't go up 10% in a bull market. It goes up a lot more than that. A 50% rise would be more in accordance with history, and a 50% rise from here gets us into those ridiculous clickbait headline numbers that one is embarrassed to talk about. But that's where we're at. That's not just me arm waving. Those are the facts. That's where we're at right now. And on, chart society, and just looking at the real world out there, we've got two hot wars, either of which could literally turn into World War III. And then there's potential with China and the saber rattling there. Now, I'm not promising World War III. I actually don't think that's likely at all. But I'm just saying, this isn't a world where people are like, nah, everything's fine. We don't need no safe haven assets. This is a world in which people are thinking, a little bit of a safe haven hedge. I don't have anything like that. Might not be a bad idea. Oh, and by the way, if there is World War III and the power goes out, your Bitcoin becomes illiquid. So that old 2,000-year-old technology of gold bullion, maybe I should have at least some of that, right? So, and then you've got a whole other thing, the de-dollarization trend. You've got central banks around the world on net buying record amounts of gold. And, that's not something you can count on happening every month. But over the months, over the years, we've seen this continue. And what's going to change that, Ben? What's going to make everybody decide, you know what? Let's just go back to the good old days and let the Fed and New York SWIFT system determine our financial futures. I just don't see that happening. The de-dollarization trend, okay, I agree with my friend Ben Johnson, my fellow Puerto Rican, the dollar milkshake guy, right? It's going to take a long time to dethrone the dollar as the world's de facto reserve currency. But the fact is that every year its share of reserves declines. It is a trend in motion. And part of that now, ever since the US weaponized the dollar against Russia, is central banks around the world accumulating gold. That's, if not like a game changer of the thing itself that will do anything, it is a change in the game, a big and material change. So there are several factors that make me, it's unusual for me to pound the table this strongly. By the way, I'm, emotional discipline and all that. This is me waving my hand like this. That's the Louis James Lobo Tiggre equivalent of pounding the table. I feel as strongly about this year as I did uranium last year. And by the way, I'm not a permabull on gold. Last year, my top highest conviction trade was not gold, it was uranium. That worked out quite well for my readers, and I hope this one will work out as well. I'm not sure I've answered your question. I got a little bit off the point, but I think, my point is that there are multiple factors here, all bullish, and we're going into that with a $2,000 level. It's hard not to get at least a little excited there. Now, don't go crazy. But if I had no allocation to gold at all, I would buy now. And that's, an unusual thing for me to say, because, it's not at all-time lows. It's not a blood in the streets buying opportunity. But it sure is something I wouldn't want to miss. And then that's gold itself. The stocks is another matter. And there we have this wonderful circumstance where the stocks are hated. On average, if you look at the big gold indices, many of them are at lows, whereas the metal is, flirting with highs. And if you price gold stocks in gold, not in dollars, but in terms of the thing that they're related to, many great companies are at or near all-time lows. So if I'm wrong about what happens to gold this year, the gold stocks aren't going to do so well. If I'm right, they should do spectacularly well. I see that as an asymmetrical risk-reward proposition, and I like it a lot.
Absolutely. Yeah. Well, I think you brought up a lot of points. What do you think would be maybe one thing that would challenge your hypothesis from being wrong, from gold actually not performing very well this year and maybe doing the opposite?
Well, given the multiple factors, it's hard for me to see a profoundly bearish scenario for gold. I mean, to see it drop back to, I don't know, say 1,500 or less, or go back to, 1,300 where we're dragging along the last trough, I just don't see that happening. I mean, let's say the geopolitics all calms down. Everybody in the Middle East decides to sit down and hug each other and sing Kumbaya. That's real likely, right? But, that alone isn't going to make the world a safe place. That isn't going to really change the trajectory that much. It's kind of a one-way thing. It can get worse and shock monetary metals and safe haven assets upwards, but it going away doesn't result in a sell-off. Central bank buying, everybody could decide, okay, we're fine to trust the United States government and the US dollar with our financial futures all around the world. That seems very unlikely. I mean, I suppose it could happen, but that alone wouldn't be enough. The biggest threat would be actually a no landing scenario. Like my view is actually that we're going to get a breakdown in the US labor market. That's going to immediately threaten a large cascading event of such profound negativity that the powers that be will open the floodgates. So while I'm in the hard camp and I'm seeing a recession ahead, I think the response to that, even as it happens, will be immediate. It'll be easy money from not just the Fed, but from Congress. The powers that be will send out the money helicopters again. So I actually think it'll be short-lived, and then we'll be back into an inflationary or reflationary boom. But let's say that doesn't happen, and let's say they don't even need to open the money floodgates. Let's say somehow I'm wrong. The US economy was much stronger than I thought or anybody else, and there's no landing at all. It's just happy, happy, joy, joy from here. Well, in that world, you still have the geopolitical problems. You still have the central bank gold buying. So I don't see that making gold tank entirely either. I do see it as a headwind. But ironically, in that world, if things are fine and inflation is still falling, then the Fed can loosen. And that's actually bullish for gold, for people who look at gold not paying interest. So I guess the answer is it would take all three. You'd have to see a miraculous cooling of geopolitical and global tensions. You'd have to see central banks around the world stop buying gold. And you'd have to see not just a soft landing, but a no landing scenario without high inflation. If we have a no landing because the inappropriately named Inflation Reduction Act that spending is starting to kick in, right? If we have a reflationary boom, it's a reflationary boom. You don't get out of jail for free. And that's bullish for all commodities. And that would include gold and silver. it's funny, people forget, oh, the Inflation Reduction Act, that was 2 years ago or whatever. Well, no, it was voted on 2 years ago. Appropriations are one thing, spending is another. There's a lot of that money that's just beginning to hit the economy now. So, Ben, as we speak, I saw a headline this morning saying that the American consumer is more optimistic about inflation than they have been for years. Like the consumer inflation expectations just hit a new multi-year low. My immediate thought was, yeah, ask them again in 3 months. Like, what happens if those people are disappointed? And even mainstream people will say, okay, that going from 9 to 4 or 3, that was the easy part. Going from 4 or 3 to 2 is much harder without breaking the economy. We'll see. I mean, even the Fed's own models call for higher unemployment than we've seen. So I'm deeply skeptical of any of these things, and therefore I'm very bullish on gold. My marching orders, my shopping list right now is gold stocks.
Assuming that, you are right this year, they typically say that silver, will usually follow gold, right? Gold will lead and silver will follow. And eventually silver will then outperform gold based off of, history, right? And earlier, actually, last year, gold actually hit all-time high, which was like big news because it hadn't been that way since 2021. So a question I have for you is, if you think about silver, when is it gonna come strong again and follow gold? And I know there's a name you usually call it Darth Silver. So when is Darth Silver gonna come back?
Oh, the Reddit crowd calls me Darth Silver for daring to say, well, we don't need to digress too much, but the Darth Silver thesis is actually not a bear case against silver. What got people riled up is that I had the temerity to say that in some future in which we had a new gold standard, that we might not see silver go back into circulation, that it wouldn't necessarily be a bimetallic standard. And, silver is the poor man's gold. And, historically, you needed silver to make change for gold. There was so much value in even a small gold coin that you really couldn't practically use it to go down to the store and just buy a loaf of bread. That was what silver was for. That world no longer exists. And the problem of the divisibility of gold is a solved problem. Blockchain solves that. I mean, nobody wants to go around carrying a medieval purse of coins anymore, even in a world of a new gold standard. You would have your gold or whatever metals deposited somewhere, and receipts would be traded for that electronically. At least that's what I think. Okay, maybe in a Mad Max world where there's no internet, you'd have to have physical coinage, in which case I think silver would go back into circulation for historical reasons, no doubt. But that's not my base case expectation anyway. But the takeaway, though, is that silver's use case is changing. And we can see that also on the industrial side. So this, I think, is more relevant to now. Like, never mind the Mad Max science fiction scenario for the future. For this year and next, even the most diehard silver bulls will tell you, yes, that silver usually lags and then more than catches up with gold later. So therefore, if we're going into a new gold bull, even diehard silver bulls' expectation should be for silver to underperform here at the beginning. That being the case, what's the rush to go out and buy silver stocks? Why not wait for the gold breakout to be confirmed and then see if, as historically, the silver price or exchange ratio is still low and the stocks are on sale, then you can buy bargains with greater certainty. Like why front run that if the standard explanation is underperformance to begin with? And then putting my Darth Silver mask back on, I actually have one. I should keep it in my room with me where I do my interviews when I answer these questions. But what if this time it doesn't catch up? And now you might say, before you might have said, well, it always has. But the last time it didn't. In 2020, we saw new nominal all-time highs in gold, and silver never caught up. It still hasn't caught up. 3 going on 4 years later, it still has not put in a new nominal all-time high, whereas gold has put in several. So it has a good track record overall, but anybody who cares more about making money than just being rah, rah, rah for Team Silver has to look at the fact that the track record is broken and the break is in the most recent instance. So if the use case has changed, if silver's role as a safe haven is beginning to take the backseat to its role as an industrial metal, then that's an if, right? You know, we still see silver move with gold. I'm just saying, you know, don't go all in on silver, or don't get so religious about how silver is the most wonderful metal in the world that you don't diversify into anything else. I think that would be a mistake. There is a chance, Ben, not a prediction, I'm just saying, dear silver bugs, there is a chance that even if we do get this big blast off in gold, yes, silver will track it, but it may not catch up with gold this time. We are in a new world where we have seen that breakdown, and therefore caution is merited. Again, this is not a bear case. I'm not saying silver will not go up when gold does. I'm just saying I'm not putting my money all in on silver more than catching up with gold this time. It didn't last time.
So, Lobo, I want to shift this conversation then to, the topic of speculation. Before we were talking about investing, speculation, then we moved to gold, then we spoke a little bit about silver. But, I know one of your greatest mentors, Doug Casey, you played a lot of poker with him. You also wrote for him. You learned a lot from him, not only investing, by the way, but also life. So a question I have for you is, what were the most memorable lessons that you learned from Doug Casey on becoming a successful speculator?
Well, you framed it in terms of speculator, so I have to say that the number one Doug Casey lesson, I would say the most fundamental thing that he taught me, and it's this kind of this obvious thing that maybe even some people think they know, but to really drink it in and make it, foundational to your approach to investing or speculating, is that price and value are not the same thing, and they often diverge. That's how markets get overbought and oversold. I'm not a believer in the efficient market hypothesis. Yes, the markets boil down and turn into a price, a lot of data, and that's very powerful and useful. But markets, Mr. Market is not a guy. You can't call him up and ask him what he thinks. Even when he's sober, he's composed of millions and millions of individuals with different goals, different thoughts, different priorities, different triggers, right? So it's not just that Mr. Market is a psycho. It's Mr. Market is just this shattered, chaotic, sometimes predictable in aggregate, but often not, mass that often overreacts one way or the other, and price and value diverges. And you can make lots of money going short as well as going long, by the way. Things that get overpriced can be shorted. Things that get oversold can be bought. That is the essence of successful speculation. Seeing that the market is wrong, being a contrarian, seeing that the mainstream is wrong, that there's an opportunity here to bet against the herd, and then to have the discipline and patience to wait that out. But let me throw a curveball at you here, Ben, because I know you like to talk about the bigger pictures. A life lesson that Doug taught me, and again, this isn't rocket science or necessarily even unique, but Doug embodies this in a way that so few people do. And that Doug is very much one of these people who thinks it's better to apologize than ask for permission, at least when it comes to, things you have every right to do. Like, don't ask the airport Nazis for permission to keep your shoes on or whatever. If I'm not talking about murder and pillaging and stuff like that. I'm talking about living your life the way you want to. And I have seen countless times where Doug waltzed right through a situation, doing things his way, because he didn't stop to cringe and kowtow and ask for permission to be himself or do things the way he wanted to. And you can say, well, that's easy for him to do. He's a multimillionaire. He has drop dead money. He doesn't have to care about what other people think. Well, that's true. But anybody could do the same thing. It's striking how liberating this is, to, as Doug says, do what thou wilt, but be prepared to pay the consequences. And sometimes you do something your way, and You know, somebody in a fancy uniform and a floppy hat gets mad at you, and the consequences aren't so fun. But if you live in fear of that and you never do things your way, you're guaranteeing that your life isn't what you want it to be. And you've placed it under the disposition and the rule of those other people with their fancy uniforms and floppy hats. Whereas if you live your life the way you want, and you occasionally maybe have to pay an extra tax for that, you're still living your life the way you want. And that's a completely different experience. And tying this back to investment, I think the same thing is actually true in the investment. You have to have some courage. You have to go for what you want. If you live in fear, cringing from how, you know, those experienced and wise professionals on Wall Street tell you should do things, you know, Ben Graham would not think that Doug or Rick or I could even exist. It's not possible to do what we do, but here we are.
I really appreciate, both, that life lesson as well as investing principle. But something that I want to, maybe talk about, Lobo, that I've never asked you is, I'm a big believer that if I was, let's just say, a doctor, I would prescribe books. And the reason why is I feel knowledge is so powerful, right? It's you can't tax knowledge. I could go on with a list of reasons, but I guess my question I want to ask you is, what are the most influential books that you have ever read that add great value, for both investors and speculators that are tuning into this video?
Well, I have to admit that I never made it through Human Action. Great if you need to sleep and you have trouble with insomnia. I've never made it through Securities Analysis all the way either. I've read bits and pieces, and I've read most of the first half of these books and bits of the rest. But I really love Ben Graham's Intelligent Investor. And that's not Graham and Don, that's just pure Graham. And he's, it's what, 70, 80 years old now, but it's not really about the stock market as it existed in his day. It's about investors. It's about people. It's about human psychology. It's about human nature. And his observations are still just spot on. And he's so funny. He's, he doesn't crack jokes exactly, well, maybe a few, but he makes wry observations, which for me are side splitters. I really enjoy Ben Graham's writing, The Intelligent Investor. I think I do have that one in here. And it might not be it's not an investment book, but in terms of breaking out of conventional thinking, learning how to think not just outside the box, but for yourself, the works of Ayn Rand are definitely, I think, very potent. And that's not to say I have no disagreements. She could do no wrong, but Atlas Shrugged really broke chains for me. I mean, it really helped me to see how much I had been programmed by my teachers, by society, by expectations, even my dear parents, right? And choose for myself what kind of man I wanted to be. And by the way, it's not necessarily a pure Randian hero, but just that deprogramming, just that getting in there and smashing all these preconceptions that I didn't even realize that I was making all these assumptions, right? That was enormously helpful. I have so many favorite books out there, but those would be two easy ones that I could point to right away.
Well, I really appreciate that, Lobo. I've read The Intelligent Investor, great book.
Sorry, Ben, let me jump in and say something else, because it occurs to me that my personal answer here might be skewed from the audience in general. If you haven't read Doug's books, particularly the original, Crisis Investing and okay, those are a bit dated. There's a lot of examples from current markets, but the basics, the fundamentals are there. And if you ask Doug today what the formula would be, it's the same basic formula as in those books. Now, I actually have only read bits and pieces of all those books too, but I lived, breathed, worked with Doug, for almost 15 years. So I was getting Doug Caseyism just mainline right into my arteries, right? 24/7. So I read those books and I already know everything that's in them. So it's difficult for me to get through there. And so I can't say that. But if I hadn't had that experience, and if I hadn't read the classic Doug Casey books, I think it's hard for me to think of something that could be better for somebody. And I should have mentioned that to begin with. And I'm not knocking Doug's new fiction stories. Those are fun too. But direct, how to be a speculator kind of knowledge. Until I write my own magnum opus when I retire someday, I think Doug's books are the number one classics.
That's great, Lobo. Well, I appreciate, all those books that you've given. I think it will add great value to my listeners who either already follow your work or have never heard you talk before. You mentioned the book, The Intelligent Investor, and, you've, become an intelligent investor yourself through making mistakes and also having a lot of successes. And you've also, I think, built a circle of competence of other friends, who maybe saw different biases, to help you become a better investor as well, whether it's a mentor like Doug Casey, who you've already mentioned. So a question I have from you is, what do you think makes an intelligent investor?
Well, Ben, these are serious questions, so I can't just be a cheerleader, rah, 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 and I hope people don't feel like I'm being the Debbie Downer here. And whoever Debbie was, Jay, I'm really sorry that your name got appropriated this way, but there's good news and bad news here. And I do think it's partly a temperament. There are people that they're just so emotional, they're so volatile, they're so angry about something that didn't go their way. There's somebody on Twitter who all but screams at me every time I say anything positive about uranium, because I guess the stocks he bought are down from the peak in 2021 when he bought. So his personal experience with uranium stocks is negative. I'm assuming it's a he. I think it's a he. But this person is so emotional. Like, they bought the peak and now they're disappointed. And so everybody who likes uranium is a liar. Like, he doesn't just say I'm angry. Like, he says I'm a liar. Because I say I've made money in uranium. Well, fact is I have made money. Like, what am I supposed to say? Right. So this person, I'm not sure I can help them. I don't know if I can calm him down and have a conversation or communicate wisdom that's going to help this person achieve better investment outcomes. Somebody that volatile, that emotional, is just the sort of person who will jump on a bandwagon when everybody's cheering it and then get hurt. Like, that's the kind of person who ends up buying high and selling low. And if one is that emotional, maybe speculation's not for you. Maybe the best thing you can do is turn your wealth over to a paid financial professional, a money manager that you agree with their worldview, and put them to work for you. That having been said, there is possible. Like I said earlier in our conversation, discipline is a muscle that can be developed. If you make a decision, you decide to get serious about this, you're going to train yourself, you're going to learn what you need to learn. I think, yes, anybody who has at least that basic characteristic and willingness to go there can do it. And without getting into like an hour-long master course of emotional intelligence, I guess the one easy takeaway is that courage from conviction comes from knowledge. Like, if you just say, oh, Lobo recommends this stock, or Lobo's bullish on gold, I'm going to go right into that, and then something bad happens or something takes longer than you expect, you're likely to be that buy high, sell low guy. You can make a mistake. Whereas if you take the idea and then study it, you put the work into it, you really understand the thesis, you know why you're buying the particular stocks you're buying. And then something happens and it doesn't change the reason. Like, your reason for owning the stock hasn't gone away. It's, if anything, is better than ever now that it's on sale. It's right. Then you have that courage, you can have the discipline. And the more you do this and the more success you have at this, success breeds success. Or like the old investment saying says, I think it was a Merrill Lynch thing. They used to put these things on your desk. It was a can, like a Coca-Cola can. And it said, success comes in cans. But you can do it. You have to have these positive experiences. So embrace the discipline and, study it, work at it, make sure you have the knowledge to make that informed decision that will give you the staying power to achieve those successes so that they can engender more successes.
That goes again with what we talked about earlier on of, knowledge, right? If you're not taking the time to understand, if you're not taking the time to think independently and not depend on others, you could get hurt as an investor, right? And so I really appreciate that answer.
I may not do myself any favors here trying to sell newsletters, but that applies even to me. Like, even if you say, oh, well, Lobo, you're so great, I trust you here, I'm just going to buy everything you buy. Even that, you know, thank you, it's an honor, blah, blah, blah. But if you don't really understand why you bought this stock, you just trusted me, and then something scary happens, it's really difficult to have discipline, and stay the trade in that kind of course. And what if I get run over by a Mack truck and I'm not there to explain it 6 months from now, right? I mean, I'm not trying to say I'm not trustworthy. I'm just saying nothing replaces knowledge and the confidence that you can have based on that. So I very much see myself as a guide and not a replacement for your own. Like, that's why it's the independent speculator. My goal is to help everyone become an independent speculator. Oh, at the very beginning, you mentioned it's funny when I went independent, I left KC Research and I decided to become the independent speculator. I circulated to Doug and Rick and my old mentors a white paper outlining my proposed business, and I had 3 tiers of service. And the highest level of service in my white paper was education. Like, the idea wasn't just that the most valuable thing wasn't to give a man a fish, but to teach him to fish, or woman, or robot, or whatever. Right? In my mind, that was the most valuable thing I could do, was to teach people what I do and not just tell them what to do. And everybody said, no, that's a terrible idea. People think education is free on the internet. You need to make research your highest level of service. So now that's what we call it on the website. But little secret between you and me and your audience out there is that, in my mind, the most valuable thing I can do for my audience is to teach them. And I try very hard to do that.
I agree. And I think the most powerful thing that any person could do for anyone else is to share knowledge and to teach, right? So I appreciate that. Lobo, something that I want to ask you that I asked you last time you were on my show. I said, who was a future guest, that you would like to see interviewed, someone that you really value. And you had mentioned Rick Rule. And since that conversation, I've had Rick on 3 times. But now I want to ask you 2 years later, who is someone that you would like to see on the show?
Well, I've got 2 answers for you, actually. 2 of my fellow Puerto Ricans here. One is, especially if it's gold and mining stocks, I highly recommend Adrian Day. I've come to know him a lot better since we've become neighbors. We occasionally have dinner together, talk about the markets, pick each other's brains. He's just a good egg. He's got years more experience than I do in this space, and I trust him. And there's not a lot of people in this space that I trust. I believe in him. I trust him. I think he's a straight shooter, and he really knows his stuff. He knows more than I do. So in particular, in the metals and mining, and particularly the gold and silver space, I would highly recommend Adrian Day. The other one, though, broader picture thinking, would be Brent Johnson. Now, I like Brent Cook too for exploration, but I'm going with the other Brent here, Brent Johnson, the dollar milkshake guy. Now, a lot of gold bugs hate him because, when the dollar looks like it's going up, he says that's bearish for gold, and people don't want to hear that. They just want to hear it's going to the moon, right? But he's not a gold bear, he's not anti-gold, and as a money manager, which he is, he tries to get all his clients into gold for safety, for prudence, not as a speculation. But in terms of macro analysts who have called a lot of things correctly and doesn't have like this dogmatic religious view about his ism, whatever ism that might be, I just like him a lot. It's a level-headed thinker. It's not your typical gold bug. You may not agree with everything he says, but it will be insightful and it will be worth considering as you make your own decisions.
I appreciate those 2 names. And Lobo, before we kind of sign off here today, where's the best place for my listeners to go to connect with you?
Yes, for the 3 people who didn't stop listening when you asked that, my standard joke independentspeculator.com. Thanks for the opportunity. Before you click pause or stop, simple proposition. If you're not following me, sign up for my free weekly newsletter. The one thing I can guarantee is that we will not spam you with a flood of daily advertisements. I hate that. And then it'll give you a chance to see how I think, how, you know, whether I have make good calls or not, and whether or not you want to hire me, you know, through one of my paid publications to be your due diligence guy.
Awesome, Lobo. Well, Lobo, I want to take this last little bit of time, you know, to really thank you for being here today. Thank you for your knowledge, and thank you for your continuous, I would say, desire to give back and educate.
Oh, now you're hurting my feelings, Ben. If this give back thing, I hate that give back thing, it implies that you owe, that you've taken more than you give. I don't believe that at all. Every penny I've earned has been giving value, and I didn't trick or bamboozle or hype anybody into it. They wanted to give me that money, and I earned it through very hard work. So I like the pay it forward model. And I know there's a movie that kind of made it silly, but the idea is much older than that. My great fiction writing hero, Robert Heinlein, is the one who really introduced me to the idea of pay it forward. So if I've helped anybody and they've done well, then you could not honor me more or thank me more than by paying it forward. And I mean, just think about it. If I do something for you, Ben, and you do it back for me, we're even. We can wipe our hands, walk away, it's done. If I do something for you and it helps you, and then that enables you to help somebody else, and you ask them to pay it forward, then my initial bit of help, it just keeps on going and going. It's a wave that doesn't need to ever actually end. And the good I can do that way is vastly greater than in a more circular, closed-end thinking. So sorry, you hit me on a pet peeve here. But dear audience, you know, never let anybody tell you that you owe the world for your successes and you've got to pay some back. I don't believe that at all. Now, paying it forward can be a powerful force for good if we so choose.